What if I told you that a company's future could be closely tied to just one asset, and the moment that asset drops, the stock can react strongly? That's exactly the situation with MicroStrategy Inc. On March 19, 2026, the company's stock fell roughly 6.5% after Bitcoin dropped below the critical $72,000 support level. While this may sound alarming at first, it's important to understand the context and the company's strategy before jumping to conclusions. This content is for educational purposes only and should not be considered financial advice. Earlier that day, Bitcoin moved from a weekly high of around $75,400 to near $71,200. For many investors, this is within the range of normal market fluctuations. But for MicroStrategy, which has transformed itself into a Bitcoin Treasury Company, these movements have a more direct impact. The company currently holds over 761,000 Bitcoins, roughly 3.6% of the total circulating supply, with an average purchase price of about $75,696 per Bitcoin. Because of this, any drop below that level creates a temporary unrealized loss on the balance sheet. This can trigger reactions in the market: automated sell orders, margin pressure, or cautious moves by institutional investors. But it doesn't necessarily mean the company is in trouble. On the contrary, MicroStrategy has significant resources to manage these short-term fluctuations. For example, the company raised over $12 billion through its ATM equity program in February 2026 and deployed most of that capital into Bitcoin. While this aggressive approach amplifies risk in volatile markets, it's designed for long-term growth. The stock's net asset value, NAV, multiple recently compressed from about 2.1x to 1.4x in a single session, signaling that market sentiment is adjusting, but not that the company is failing. These short-term swings are part of the normal risk profile for a high-exposure Bitcoin strategy. It's also worth noting that not all crypto-related companies were impacted equally. Coinbase Global, for instance, fell only about 3.2% thanks to its diversified revenue streams, including trading fees, stablecoin operations, and institutional custody services. This shows that companies with broader business models are less sensitive to Bitcoin's short-term price movements, highlighting that diversification can mitigate risk. MicroStrategy's model effectively makes it a Bitcoin proxy in the stock market, similar to how gold mining stocks reflect the price of gold. Traditional investors can gain Bitcoin exposure without directly holding it. However, the market landscape is evolving. Bitcoin ETFs and crypto index funds are becoming more accessible, which could reduce the premium previously associated with MicroStrategy stock. Regulatory scrutiny is also increasing, as one company holding such a large portion of Bitcoin raises questions about market concentration and decentralization. Looking forward, the company's short-term outlook remains stable. It maintains approximately $1.44 billion in cash reserves, enough to cover operational costs and obligations over the next year. The company's strategy depends on the stock trading at a premium to its Bitcoin holdings. If necessary, MicroStrategy could adjust its ATM equity program to avoid diluting shareholders. Analysts also suggest that over the long term, the company could explore additional avenues such as yield-generating strategies or financial services, similar to models used by mining firms to reduce dependence on Bitcoin price movements. At the center of the strategy is Michael Saylor, who remains committed to the HODL philosophy, emphasizing Bitcoin's long-term potential. While short-term volatility is expected, the company's focus is on the broader, long-term growth of digital assets combined with sound corporate finance. A 6.5% single-day drop, while noticeable, is within the expected risk parameters for a company with such concentrated exposure. For investors and viewers, the takeaway is clear. MicroStrategy is not a traditional safe stock, but it is a managed, high-risk, high-reward investment with strong liquidity, long-term conviction, and a strategy built to endure market fluctuations. Key levels to watch include Bitcoin near $70,000 and MicroStrategy's NAV multiple around 1.2x. Holding within these ranges could indicate a healthy correction rather than a crisis, while larger market declines may require reassessment. Overall, this is less of a gamble than it might first appear, but it remains a strategy best suited for those who understand digital assets and the inherent risks of concentrated exposure. So, if you found this video valuable and want to stay ahead in crypto, market trends, and smart investing strategies, make sure to subscribe to MSTR Hub. Don't forget to like this video, share it with others, and drop your thoughts in the comments. Is this a real opportunity or just another risk? And most importantly, hit the bell icon so you never miss an update. Thanks for watching, and remember, smart moves build strong portfolios. MSTR Hub, where market insight meets strategy.